Finally. All right, guys. Welcome, welcome, welcome. Looks like some possible predictions playing out. If we broke under the 112, which we did, obviously. So let me sounded like Fat Albert. I'm not sure what part I did that sounded like that, but oh, hey, hey, hey. Hey, hey, hey. It's Fat Albert. All right. We are gonna share my screen right now. Robert, I just seen you and I forgot to respond to you the other day. It's Ohio is where those apartments were. You just reminded me.
The hell.
Thanks, Nico. Glad you're doing well with the apartments.
Thank you. It's a lot of work. It's a lot of stress, a lot of.
So one day we gotta go to lunch. You gotta tell me how you structured that deal.
Ah, dang, selfish son of a bitch. Oh.
What are we talking about, Steve? You might need to mute yourself out, buddy. Unless you're talking to me, of course. And you can call me whatever you want.
No, I was driving and some idiot pulled out in front of me.
That's all right. All right, guys. Yeah. CFM. I don't know who said that, CFM, because all I see is CFM. So I'm not sure who that is, but we're closing on a property in Pennsylvania next month. I think it's called California, Pennsylvania, which I never heard of before up until recently. But also a couple in West Virginia, right on the border there. Got a few going on up in that region. It's the only place, not the only place, but the Midwest is not in the Midwest, the Mideast. I don't know which one you want to call it. Where you can buy a 40, 50 unit apartment complex for the price of a house here in Tampa Bay. Crazy. All right. What is going on here? I know this looked like a huge drop today. Looked like a huge drop, which, it is kind of, but we are still in a downward trending channel. So it just depends on the time frames and on the where you have your lines drawn. But like if I go up to the hourly time frame, you can see here that we are still in the downward trending channel. We did have a little bit of a moment here where we broke above it. And that was on the last call. And I was telling you guys, it needs to hold above 112,500. It needs to get above it and hold above it. And it did. It went above it. It went to like 113 yesterday, 113,100, and then fell right back below, got below the 112,500, hit the 112 on that red line, bounced a lower high, and then fell below that and retested. That was an indication that it's just not holding above the 112. 112 was the previous all-time high going back here for some time. Been having a problem with something going on here with my charts not loading fast enough. Probably because I have 600 tabs open. There we go. So right here we have the 112. And I'm still in that short position from the other day. I never closed it, but coming down, and I'll be in profit on it. I think it was like 800 negative yesterday when we were up here, but it did fall back down. I left it open because, guys, I was pretty confident that, we're having an issue here. And also we have this giant M pattern on the hourly and the higher time frames. And what does this really mean? This could be the big purge. This could be the big, not the bear market, but just the big cleansing before the next pump. And that happens. That happens often, actually. It happens almost every time we break a new all-time high. Let's go to the daily and look. Every time we come up and make a new all-time high, boom, right here, 74.5, 73.8 rather, we fall and consolidate for a while. On this one, it was from 73.8 down to the low here. It was 32% drop before we bounced out and made a new high. And then on this one, we come up here and hit 108. We double top at 109 and we fall all the way to 74.5, which was another 32%, 32%, 32%. And then we come up here and we etch out another all-time high at 112. 112, just a little bit higher than the last one, which was 109. And then once again, we dropped all the way down to here, which was about a 12%, 11.5% drop. We break out 123. We hit 123. And when we hit 123 here, right there, 123 we dropped all the way down to 112 again, which was 10%. And then we come up here and hit 124 and drop right now so far all the way down to 108. 108, pretty much on the nose, 108.046, which is 13.7%. Is that over with? If we do hit 30% or 20-some%, we could literally come and hit this line. What is this line? I'm thinking this is the upward trending support going all the way back to 25K. That would not be an anomaly. That would not be, oh my God, what's going on? Yeah, I mean, that would bring us back down to 98K, 97K if we were to go straight down, but we probably won't go straight down. It'll probably go sideways up, sideways down a little lower, lower highs, lower lows, somewhere over in here, possibly just down to the 100K level again, if it continues down, if we cannot pull back up and get back above the 112. So we're at 108.3 right now. And it would need to hold under 112 for probably a whole day on the daily time frame. This is the daily time frame I'm on right now. So let's zoom in. Just kind of giving you the overview breakdown of how I look at this. Not everybody does this or thinks the same way or thinks that it's going to do what I'm saying. But if you guys recall the last few calls, I pointed this out and told you what the possibilities are before this started dropping again. Let's get rid of some of this. I mean, now if you look on a more molecular level, you can see that we had some downward trending channel here where we broke to the bottom, hit 112, broke back in, broke up through it, retested it, went up higher, hit it again, broke back through it, hit it again, broke up to the top again, and then broke through it again here on the bottom, retested, came back in. I mean, it's all over the place. Just can't seem to get out of this channel. And then just now fell right back through it. So is that a real thing, that channel? Yeah. Now, what is this line? Let's go look at this line. This line here is, I'm going to change the color just so that we can see it clearer. I'll just make it yellow since I don't have yellow on here. And this is the upward trending resistance going all the way back to 2021. Okay, so we hit it into 2021. And by the way, it goes back further, but on this chart, I can only go back this far. So it goes back to like 2017. So we hit it again, 2021, hit it again, and then went into the bear market, came all the way down to 15.5 right here, which was the low and the bear market bottom right here. We climbed out of the downward trending resistance, broke out right here at 17K, 19, 20K, dropped down to 15, bounce, and that was the beginning of the bull market. And so we've been climbing ever since. And then we've created this upward trending resistance all the way up to, let's see, 1, 2, 3, 4 touch points, 5, 6 touch points on several all-time highs, consolidation, all-time high consolidation. And then each one of these, this all-time high hit up here at 108. It hit the top of that resistance line, and we hit it again at 112 right here. And then we broke through here for the first time since 2017. Broke through, hit 123, double bottomed here. I mean, not double bottom, came down and retested 112 again, and then double topped here at 124, and then came back down to retest the 112, bounced, pretty high bounce, but not high enough to get back higher to a higher high, and then made a lower low, and then a lower high. So are we going to make a lower low here? I would almost bet yes. And where is that going to be? Probably right here where I gave this update in the right here. I put a circle on it right there, and that could be pretty low. I took this line from the previous all-time high of 112, and then that was the previous bull flag right here where we broke out and retested before we broke out. And let's just zoom in a little bit. Somewhere at the bottom of this downward trending support, we will probably hit. And if I were to guess, it would be right where those two lines converge. Let's go back and look. Where would that be? That would be, here's the previous all-time high, 112. Let's do a bull flag all the way down. This was where we broke out of that bull flag, retested and broke out. This was the bottom. Normally, I wouldn't bring this forward any further after the breakout, but I'm going to for the sake of this argument here, is that if we continue in this downward trending support, these two lines converge somewhere down here in the 120, the 100 to 104 range, somewhere here. This is where I drew that circle on my screenshot right here. What's the likelihood of that? I mean, that's a pretty big drop. Yes, it is. It could go a lot further, guys. It really could. If we break and can't get, if we can break this whole zone right here, which is the 107.5 to the 110.5 zone, which was major support and resistance, major consolidation here, resistance before breaking out. That's where we're in right now. We hit it right here, resistance, came down to the center line, broke out, got sucked back into it. And now we're coming down to the bottom of it. We could bounce right here on the bottom of it, and that would be done. So that would be a 107, about a $107,000 low. That could be it. And we could bounce out, and that would be also, if we just keep this channel going. Let me get rid of some of this other stuff so it's not so jacked up. Let me get rid of these yellow lines here because we already broke out of that. You know, it gets a little convoluted with all my lines. I don't need that to go all the way there anymore. Don't need this because we just broke below it. For now, I'll just leave it. We're in a downward trending channel, and we already completed the bottom of the right side of the M pattern. We bounced and we did not make a higher high. Actually, we made a lower low and we broke through. So if the M pattern holds true, and we just take a line from the top of the M to the bottom, which is the 112 to the 123, and bring that down here to the breakout zone, which is right under the 112, that would bring us right down into this area, somewhere in the 100,000 to 103, 104 range. Now, if we bounce there, it will look like this. It would just wick down, boom, and be right out and come back up. But if we get down below this and we bounce and we come up and hit resistance in this previous bullish flag pattern, right where this line is, if we hit resistance there and we're back into this flag, then I'm afraid that the next level down will be where? It's not rocket science once you know what to look for, guys. And that would be the upward trending support right in this range of 90K. And what would that be? That would be from the top, a nice exact 27% down, maybe 28, oh, probably 30%, which is 32, 32. I could probably go back and find another somewhere in that range. That one was 21. Doesn't look as big, but that was 21% drop right there. On the way up, we have lots of big 30% pullbacks. 22, 23% right there, from there to there. Happens all the time. Right here, probably another 20%. On the way, right here, probably another 20%. So 20, 20, 20, 22, 32, 32. Would it really be that surprising? Not to me. Especially after breaking above the upward trending resistance and not being able to hold above it. This could be much worse than that, because if we break below this upward trending support, then that would be, we need to stay above that. Let me just put it that way in order for the bull market to continue.
So if we're not in a trade at the moment, Nico, what would you suggest we put in as a take profit and a stop loss?
I would say that the safest thing to do would be wait for a bounce. Because right now it's falling knife territory, but let's go, because it could bounce at any moment. And let me go back to the lower time frame and show you. In this zone that we're in right now, this is this grayed out area. This is major, resistance area here before we broke out and went to these highs, and it's back down into this zone. So it is possible that it just, bounces up and down in this zone and then comes back out. That would be nice. As you can see here, and here, and here. This is where we broke out of it and held as support. Right there. Broke out, boom. And then we climbed up. So here is the first time we came down and literally wicked down to that level, bounced, went through it, retested underneath, went through it, retested above, climbed a little higher, fell below again, and retested underneath one more time after wicking up a little bit. And now we're kind of in the middle of it. So, obviously if you were already short up here, you'd have been in a good profitable trade right now, but that was sketchy because we were waiting for the breakout to the upside. If this broke out of this downward trending resistance line to the upside, then we would have not been going short. So, when it all of a sudden just happens out of the blue and just falls like that, and if you weren't already in a short, then you missed that big drop. I was already in a short, but not up here. I was in a short down here already because I got short down here. Not because of this channel, because we broke below the 112 and retested as resistance. That's why I went short down here. I was thinking, okay, well that could be. Now, if you guys remember, I went short and long at the same time. So I had a short in case it dropped further, and I had a long in case it went up. I stayed in my long until it got up and started banging its head on this wall again, on the ceiling, and then I closed that out. I moved my take profit target way up here somewhere, and it took me out on the way down. So I made money on the long back up, and I just stayed in my short, and now my short is coming now back down into profit. This short right here. But that was risky because had it just kept going, this short would have got further and further negative, but my long would have been counterbalancing that out. I would have not made money on those two trades, but I would have not lost any either. So what you normally do in that condition is, if you're going to do any kind of hedging, is if you do a short and a long at the same time, you usually get out of one or the other when the other one is when it's confirmed that the other one is going to continue in that direction. So if this would have broken out up here to the upside, I would have stayed in the long and reversed the short. I would have taken the loss on the short, but I would have been equaled out with the long because it was already that much in profit. And then it would have been just the same as me going long here without losing any money. So it is a game. That is a game. I don't recommend you doing that until you know what you're doing and understand the risk involved there. But and that's why I don't give hedge signals. I don't say go long and go short at the same time, because that's a robbing Peter to pay Paul situation, and you better be able to pay them both eventually.
Yeah, I got taken out on the short. It was going up too high, so I stopped it. And then I got taken out on the long as well. So yeah, it is risky.
Yeah. Jen, what tool was the red vertical arrow? This one right here. Amy, it looks like Amy answered that, but you just come over here. It's the fourth one down. 1, 2, 3, 4. Click the little arrow and then come down here to price range. Price range, you start it wherever you want to start the range. So it would be from this spike up right here down, and then you hold the left button on your mouse down and you let it go wherever it is you want to stop it, which would be at the bottom of that range. And it will give you the dollar percentage down and the price amount down. Let's see. Sometimes I read comments and they don't make sense to me because you commented on something I might have been saying earlier. So, yeah, I think the big fast move is probably done for the day. That big drop right here. That's, it might slow down now that it's hitting some support down here in the zone, but it's not bouncing very quickly to get out. So that is usually an indication that the bottom is not necessarily in yet. Let's look at it on the close-up level. We've had a couple times where, I mean, we drop and looks like we're curving around and it just creates a lower high. Drop, curve around, lower high. Drop, curve around, lower high. Drop, curve around, lower high. This one spiked all the way up to retest this support. Drop, curve around. Could it come up and retest? See, a lot of people think, oh, it's coming back up. But really, you just have to look, where is it coming back up to? Support, previous support. Where did this one come up to? Previous support. Where did this one come up to? Previous support. Where did this one come up to? Previous support, somewhere up here. Resistance. So, yeah. And then if you look at why this was support to begin with, and you go sideways, you go to the left rather, and you'll see that it was support over here. This is the stuff you got to master. I wouldn't say master, but you have to at least know what you're looking for to kind of understand when you should enter. So to answer your question, Graham, before you just jump in, when you say, where should I get in? Where should I get in? Maybe if you're going to short, don't do it now. Wait for the retest and bounce on previous support. You want it to go up, which this probably will come back up, hit this. And then if you start to see that it is starting to come back around, this could be a good entry point for a short, but you would want to put a tight stop loss right above that level, that area. Why tight? Some people like to give it room, but when it's doing this, I don't give it room, because if it breaks above this, then this downward trending channel is probably over. I use tight. I'd rather get taken out tight stop loss. And then, because it could wick up, it could go up and wick up like it did here, but then come back down after the next candle. And then all you do is just re-enter, and you can go ahead, take that tiny little loss right here. That's just me. That's what I do. Now, if you put your stop loss somewhere up here instead, and it wicked up and missed it and then came back down, okay, you didn't get stopped out. But the way I look at it is, if it's going to continue this downward trending channel and it goes above this, and I move my stop loss way up here, but it goes above this and it doesn't bounce here. I mean, it does bounce here rather. Instead, it goes up and then comes down and bounces. I'm just going to lose more. I'd rather have been taken out here. That way I can just reverse the position. That's just me. That's more gunslinger scalping trading. It's not necessarily the most, safest thing to do, but it's more you're in and out more often, but you're also taking much smaller losses than I think a lot of you. And a lot of you don't like tight stop losses because they get hit. Oh, I don't like to use stop losses that tight because they seem to always get hit. Okay, well then that just means your entry was not right. I mean, that if it got hit, then your timing was off. Doesn't mean it's not going to do what you originally wanted it to do, but maybe not when you thought it was going to do it. Or you're betting on it going down. You're betting on this continuation pattern. But this might be the time. It did it here. It went down and came up and hit it. Did it here, came down and hit it, came up and hit it. Did it here, went up and hit it and came down further. But maybe this time is the time that it finally breaks through. So there's two things you can do. Either wait for it to come up here and bounce and come back down and then go short and put your stop loss here, or don't get in here, don't short here, don't long here, don't short here, don't long here, don't and miss out on this potential opportunity. Those are your options. Or wait for a much more higher expectation trade, higher degree of probability trade setup, because this is uncertain whether we're going to just continue down in this fashion. But the fact that we broke the 112, I know it seems way up here now. It just seems we were just above it yesterday. I know it seems way up here now, but I'm on the 10-minute time frame, so it's really not that far away. And we retested and dropped, and we're making lower lows, and we're coming back in to this channel down here in the 108 range. And it's having a hard time pumping up. So that means there's very little buying pressure, if any. I mean, we sliced through all of the liquidity up here and down here right now, and it's just hovering going into the weekend. Really not much going on here. Most people don't know what to do. Yeah, Joe, good point. Joe said US traders cut out early today for the holiday weekend. I forgot that it is a holiday weekend, but that is probably true. Yep. What do we got? Labor Day or something? Monday? So I didn't hear you. I'm sorry.
Hey, Nico,
Labor Day. Yeah. Yes.
when I draw, 1 second here. I draw the fib on if you go on the daily and your bottom support and resistance, I draw the fib on that, then it's kind of in the golden zone. And
We're at, say that again, Willem.
I went on the daily and then I
Okay.
took I draw that bottom support line, the bottom support resistance line on the channel.
Right
And then
here.
I work my fib off of that. It's kind of in the 0.05 fib zone right now, going down to the 0.618.
This line from here.
Yeah, from that line, yes. Yeah, I draw the other fib channel like John Sigpal does it on an angle. I don't know if it makes a difference, but
We're up here at 108. Yeah, I'm just looking at it right now. I don't know if I did it the way you're describing it, but yeah, Bill could answer that better. He there's some people do it from the top price down, and some people do it from the location that you're describing here up. But if I do it from the top to the bottom up here and bring it down to that level,
I mean, that's the great thing about the fib is you can throw it on there almost any way you want to and it works. I would run from the 74 to the 125. That's what I would run because we're in a downtrend right now. And that's the last major trend. And that would give us our golden zone targets.
74
Yeah,
to,
the low. Yep, to the 125.
oh, we're down here. To 124.5.
And then you could turn on your extensions if you wanted to. But yeah, we're coming down into the golden zone for sure.
Yeah, I draw my FIP the way like John Sigpal does it, that angle FIP or whatever.
So would you go from the 2 points at the top down to that middle point on the low? Or why don't you share a chart with us, Willem? That'll help us a lot.
How do I do that on the computer?
If you're on a PC, you could do Alt print screen or use the snipping tool. I think Nico could share how to do the snipping tool easier than I can.
Yeah, you just click your little computer icon down here, come up here and click on it. And it's going to show you your tools. Just, I mean, there's one called snippet. Just type in SN. You see it right here, snippet. And then this is it right here. Opens up and it looks like this. You just click new and then you just do this to whatever part of the screen you want to snip. And then it does like this, and then you just right click it, copy and paste it. Allows you to.
1 sec, I gotta figure that out. Yeah, I'll just make a picture with my phone otherwise.
You can do that too. Oh. Jen, I trade on BTCC. I'm not sure. Yeah, Bill asked the question. BTCC, the platform, or are you talking about BTC coin margin?
You can it now offers BT. You can trade if you have I think it's stable coin that's based in Ethereum now.
Which one?
I think that's what it is.
Which one, Joshua?
It's go to the futures, click on the futures box or or your charts, whichever one. Yeah, see where there's coin M. There's USDC M and USDM and USDT now. They offered a new one.
Yeah. USDC is,
I think that's Ethereum. I think.
Coinbase. Yeah. I mean, I think it is. I think it might be on the Ethereum blockchain. Let me see. I'm not so sure because you can trade. I don't think so because you can trade Bitcoin on USDC. USDC is, I believe, it's Coinbase's stable coin.
Okay, yeah, it might be. I know they just added it.
Marcus says Solana.
Yes, yeah, that's right. It was Solana. I remember seeing that. It's like this just like USDT for like that's what on whatever blockchain it's on. It's just another one you can convert to.
Yeah. USDC happens to be the stable coin on Coinbase that you put, if you put money into USDC, you can spend it on their debit card. You can get a debit card from them and just spend it as if it's cash. I always
Hey,
just
Nico?
Coinbases. Yeah, go ahead.
Is there any platforms that allow for joint accounts?
I mean, probably not, because I think that you can do that on your end where you can give somebody your login access, but I don't really know if you'd want to do that.
And from what I found, there's none of them that allow you to assign your account to a trust. Is that a fair statement, or do you know of a way to do that?
I think on Coinbase and on the centralized exchanges, you can add people or open up an account with an entity, but you do have to go full KYC.
Okay, so you'd actually have to set up a corporation, and the corporation would be the entity that the account owns. Is that?
Yeah, there is some tax attorneys, some crypto guys out there that will probably tell you that you would need to, or you could take your existing account in your name and transfer ownership into the trust once the trust is set up. There's probably a way to do it legally, but I wouldn't give the advice on that. I would let me find that there is a group out there that does deal with that stuff. Let me see if I can pull them up. I wouldn't want to give you that advice.
It's ironic this topic came up. I just met with my trust attorney yesterday, and she was asking me the same thing. Can I put my accounts in the name of the trust? You think that the centralized, but not necessarily the Phemex?
Well, Phemex is decentralized, so you can. I don't even think it's in your name. Did you fill out any information when you opened your Phemex account or give any KYC?
No.
It's just an account number.
And where's it go when I die?
Someone needs your login information and they need to know how to transfer out of it. It doesn't go anywhere. They don't know you're dead. It just sits there forever. You know how many people are dead right now with wallets filled with Bitcoin that no one can access because they never gave anybody their login information? So that Bitcoin, like I said, I've said this on a previous call. Some of you guys might have thought I was joking, but Bitcoin is one of the only things you can take with you when you die. Because if someone else can't access your wallet address, no one will ever get it. It'll just sit there dormant. Unlike real estate, if you die and you have a house, even if it's in your name, and even if you have no will or trust or anything, it will eventually get liquidated and sold to someone else. If they come into your house after you're dead and they find all these, let's say you got a lot of stuff, nice stuff, bad stuff, dumb stuff, cheap stuff, garbage will be thrown out, expensive stuff will be auctioned off, the house will be cleaned up and sold. Oh, they find some gold bars in there in your safe? Those get taken, sold, the estate gets cleared, and if they can't find an heir to give it to, goes to the state. Bitcoin, on the other hand, if you die with your login information in your head memorized, no one will ever get it. It'll just sit there. They can see it on the blockchain sitting there, but it will never be touched. So technically speaking, you could take it with you.
There was some guy, I think it's back east. He lost his PC and it's in a garbage dump.
Yeah.
He's been hunting for like 5 years or something to try to find it's like millions of dollars in Bitcoin.
He lost that case. He can't look for it anymore.
Yeah.
Yeah. He
But
tried
I mean-
to offer, it was over $1 billion at this point, and I think he even offered the garbage dump company that owns the landfill 50% of it if they help him find it, and they turned it down for, I don't know why they would turn that down. They should just let him look forever. But there comes a time when they just keep dumping more garbage on top of everything and packing it down and burying it. So it's also a big business, so they're not going to stop everything for that. But especially when they don't know, they're just taking someone's word for it that it got thrown out, so they really don't know what's in there and they don't understand it. But yeah, that happened, and that's not the only time it's happened. The guy who was given 10,000 Bitcoins for 2 pizzas didn't know what he did with it either. The guy who gave him the 10,000 Bitcoins for 2 pizzas, it would have equaled $1.2 billion today that he paid for those 2 pizzas. I don't know if you guys don't know the story, but back in 2009, someone wanted to be the first person to do a transaction with Bitcoin, and he bought 2 he finally found a pizza restaurant owner who was willing to take Bitcoin in exchange for pizza. He wanted 2 pizzas. The total value was $32. The guy said, yeah, sure, why not? And he says, how do I take the Bitcoin? How do I get it? How are you going to send it to me? He goes, he helped him set up a wallet. I think it was at bitcoin.com or something. I don't know, back then. And he sent him 10,000 Bitcoins because 10,000 Bitcoins equaled $37, which was for the 2 pizzas. That 10,000 Bitcoins today would be like 1.2 billion. But the guy who got the 10,000 Bitcoins, the pizza guy, has no idea what happened to that 10,000 Bitcoins. The guy who sent it to him, I think, is still doing quite well because I think he had a lot more than 10,000 when he sent that to him. And but still, just imagine that you paid $1 billion for 2 pizzas. hindsight is genius, of course, and no one would have ever guessed that Bitcoin would have got from pennies to $100,000 plus back then, but it did. Yeah, Jeff, that would be a good reality show. Looking for billion, looking for my billion. What were we just talking about? Someone asked me for something.
An attorney, crypto current attorney.
Oh yeah. Thank you. I'll have it here in a second for you guys. Just on their website a few days ago, actually. In the meantime, if you have any questions, feel free to ask. I'm a little bit, things are moving a little bit slow right now. Bitcoin's kind of hovering in the 108 range and just hasn't really bounced out yet. So there's nothing strong happening at the moment.
What are your thoughts on ETH?
I mean, I've been accumulating a lot of ETH lately. I mean, over the past couple months, since really, I think once I started seeing Bitcoin dominance waning and altcoin season about to move, ETH is a good thing to invest in and hold. Most of the cryptos, I mean, most of the utility tokens out there that will eventually be something or do something or have the capacity to provide some type of service are on the Ethereum blockchain or the Ethereum mainnet network. So as a byproduct of those coins being successful, Ethereum will naturally go up in value. And if Bitcoin did shoot up to 150, 160, or 200K, then Ethereum, you're looking at probably $10,000, $15,000, $20,000 for Ethereum, in my opinion.
As far as like current situation though, like price wise, where do you think it's going? Is it going down still, you think, or
Going down? I mean, it just hit an all-time high, didn't it?
yes, it did. Now it's down just like Bitcoin, but do you
Yeah.
think it's going to be pumping anytime soon, or
Nah, it's still correlating with Bitcoin. So, I mean, if I give a signal for Bitcoin, Ethereum, and XRP, they're probably all doing the same thing at the same time, and the charts even look similar. Charts even look the same. So it's kind of hard to. I mean, you don't really need to trade them all because they're all correlating. They're all doing the same thing, really. But you get different percentage gains on each one if you are trading them all. Trying to find this crypto. Company that deals with
Nico, would you
I'll
say that
pull
we're
up.
still
I'll pull up. Sorry, I'll pull up ETH in a second. Go ahead.
would you
Jeff.
say that we're still in a bull run or heading into a bear?
No, we're in a bull market still for sure.
All right.
I would say that it needs to drop. I would say that it needs to stay above 70K. It could go all the way to 70K and we still be in the bull market and still have another run up to 150. A lot can happen in a couple months, guys. I mean, we got 4 months left of the 12-month candle on the current candle on the 12-month time frame. We got 4 months left, and a lot can certainly happen during that time. I mean, in 4 months we went from 120 12 down to 74.5 and all the way back up to 120, 124. So we can certainly see something like that again. All right, while I'm looking for this, I'll share this in the group if I can't find it in the short term here, but I mean, this guy has a business. I mean, he's promoting his own stuff, but he does specialize in that kind of stuff. So I don't really like to promote other people's businesses really too much in our group because, but it is unrelated to it. It is about stuff that we don't do. So it's not really competing against us. Oh, okay. I might have found him. I was going to say I see it all the time when I'm not looking for it. All right. I'm just going to share my screen and show you. It's Digital Family Office Group, Digital Ascension Group, Digital Asset Custody, Wealth Management, Private Consulting, Family Office Concierge, secure and insured institutional grade custody for your digital asset portfolio.
Is that the Jake Claver?
Correct.
Yeah, I was thinking about joining that, to be honest.
Yes. Some of you guys may have seen the guy behind this. He's being interviewed all over the place. Now, I'm not saying that I am endorsing it or trust it. Look into it. Do your own research. I don't know him personally, but he is being interviewed all over the place on some very popular networks in regards to how to protect your crypto assets. And that doesn't necessarily make him legitimate or anything, because I mean, look, FTX, Sam Bankman-Fried was interviewed everywhere too before. It's this guy right here. You've probably seen him.
Sam Bankman-Fried. That was funny. I
got that one. Yeah, and so he was being interviewed everywhere too, and people trusted him. He looked harmless, right? He had his goofy little nerdy look to him, and he was doing big things. And it didn't work out for people. So just be careful, but do your research. Jack Claver, and it is Digital Home Office or Digital Ascension Group, and you can see that it's digital family office.io. I'll just put it in the Zoom chat, but just hear me say this: I'm not endorsing or recommending. Well, I mean, I'm giving you the information, but I'm not really recommending because I don't know. I'm looking into it myself.
I heard him say you had to have like 500K to be a client at this time.
No, 50,000 or more in crypto is when you need to do this work on this kind of stuff. If you have 50,000 or more in crypto, if you have less than that, you don't really need to worry too much about. Because here's why. Because if you got $50,000 with XRP, and this guy will say this guy says that he thinks, whether you believe it or not, he says that XRP could be as high as $1,000. And he doesn't say 5 years from now or 10 years from now. He says by the end of this year, and he explains why. And a lot of people are saying, oh, well, that's impossible. Cap rate is impossible. He doesn't care about cap rate. It has nothing to do with cap rate. It has to do with all the changes that are taking place with Ripple and all of the banking institutions and the money system in general and all the transactions worldwide. It's irrelevant what the cap rate is. It's kind of like real estate, if your house if the average house price in a neighborhood is $500,000 and a house sells for $650 in that same neighborhood, then you just raise the cap rate of that neighborhood. It doesn't matter what the previous prices were. Doesn't matter. And a lot of things, I know that might not be a great example, but go, you can go watch him, go learn about, go watch his videos. Maybe I can find one where he's specific.
You can't have, trillions of dollars in market cap in these networks. I think people are gonna be very surprised by what the market cap of some of these networks go to, because they're used to looking at it as a stock, where all of those shares are traded. but circulating supply and available supply or total supply of a token are very different.
Right.
I'm excited to see some of the market caps of these digital assets far surpass these trillion-dollar companies that you're used to seeing on the stock market. You can't have, you know, true.
So circulating supply different than available supply. So, I mean, for instance, the banks, the XRP companies, the founders, XRP itself, Ripple, they could have a certain amount of XRP different from the amount that's available in to the retail market out there. You go buy XRP on Coinbase or on Phemex, let's just say, that's the circulating supply that's out there. But if the banks can buy directly from XRP, then it won't affect the price for us. So if the bank goes and buys a billion or trillion XRP from Ripple, then nothing changes with the value of it. But the courts are now saying that they're not going to allow that to happen. And if they're going to buy it, they're going to buy it on the open market. And that would definitely cause the price to skyrocket. And so I don't have all the details. I can't say exactly.
You guys are obviously a leader in this space, but there are other people trying to solve this in maybe similar or dissimilar ways. You've got Chainlink with CCIP or Axelar also connecting many blockchains, utilizing, you know, their infrastructure. So what sets you guys apart from some of the other competitors in the space? And do you guys have a specific niche of like, we do this better than them, and this is kind of our go-to-market strategy?
Absolutely. So I'll take this question in a few parts. Number one, I think it's important to understand the opportunity size. So it's like, understand that and why there's fierce competition. And then I'll get into some of the just cold hard facts.
You guys can go. You guys can go do your own research and watch this guy. Let's see.
Please explain XRP ETFs and price appreciation. Right now, we already have some XRP ETFs, but they're futures ETFs. And in futures ETFs, they don't have to hold the underlying assets. So they don't actually have to buy XRP, they're buying futures. Now, they can take possession on the other side of the futures contract. Most of the time, they just keep rolling futures. So they don't ever have possession of the XRP. So there's not any constraint on supply and demand dynamics. But if you have a spot ETF, very similar to the Bitcoin ETF, they started buying up a bunch of Bitcoin as people bought the spot ETF. And so therefore, they're taking all that Bitcoin off the market. You would have the same thing happen for XRP when spot ETFs are launched. And depending on the amount of volume that they saw in a very short period of time, if you had the Ripple case settled, maybe you have announcements from Bank of America and Amazon and Apple and Google and all these people that are issuing their stablecoin and using XRP that are all rolled out at the same time somehow, probably it would be a lot of FOMO from retail into those ETFs and a lot of volume on it all at one time. And so with that, you would get supply shock. There wouldn't be enough XRP on the market to be able to provide enough for those ETFs. And because of that, you would need higher prices where retail would then liquidate a portion of their portfolio and sell to the institutions to be able to back these spot ETFs. And so that's how you drive price higher and higher and higher very quickly when there wasn't any available on the market and you had to push it to 5, 10, 15, 20, 25, 30, 35, 40, $50 for retail to sell their positions to the institution. So that's how that would work.
I'm going to play one more and then we'll move on. But
why don't financial institutions begin heavy XRP adoption before ETF availability? Why allow themselves to be treated as an exit liquidity for thousands of people once XRP appreciates? They don't care about you. They'll be happy to buy your XRP at $100, $1,000, $2,000, $5,000, $10,000 because it's going to go higher. Why do they buy Bitcoin late? Because it's going to go higher. They don't care. They've got the money. They also don't care if a couple thousand people get rich. There might be 10,000 people or 50,000 people on the planet that have enough XRP on the other side of price appreciation that hang on to it, that actually do well. There's not that many of us. If you're here, if you're watching this, you have found something before everybody else and you've positioned yourself well and you've figured it out. Almost never has there ever been a time where retail could front run the institutions. And this is one of those times. And they don't care because retail might hold 2 billion XRP total, maybe, probably not even that much. It's not that much. It's 2% of the supply. Not worried about us. And institutions aren't here. The price action you're seeing is institutions purchasing XRP using TWAP and VWAP. There's no other way that the price is here. Retail is not doing this and then holding the price here. No way. This is institutional buying that's gobbling up the amount of XRP and keeping the volume at the rate that it is to be able to hold the price above $3. So the institutions are absolutely buying here. They're just doing it in a slow, methodical way so that they don't cause a bunch of volatility in the market through your time weighted average and volume weighted average, TWAP and VWAP. Why don't?
So seems like a smart guy in regards to what's happening behind the scenes. And so someone asked, what does he do? What do they do? They basically help you structure living trusts and how to structure yourself with entities to hold digital assets, so that you don't get burned by centralized exchanges and or taxes on your exit. Okay, let's just say you have, I don't know, 100,000 XRP. I say that some of you might say, who's got 100,000 XRP? A lot of people. A lot of people. There's some people in this group. Let's just say you have that many, and it's $3 right now. Okay, so you got $300,000 worth. XRP goes to $100. Let's just say, hypothetical. You're going to want to sell. You're going to have a huge tax event if you decide to sell. You could also find yourself in a situation where if you have it on Coinbase or some kind of major exchange or centralized exchange where they hold your money ransom, like you can't just go sell $300 million or $30 million worth right there and then transfer it to your bank account. Okay, there could be some problems that you could face. Now, there might not be any problems. I mean, I've had some big sells before, and I've had no problems with Coinbase, but some people do. Some people seem to have problems with Coinbase. I don't ever have any problems with them. So I've been with them since 2009. But so you want to be able to structure yourself so that you can minimize or reduce your tax liability down to zero, and you can do that if things are structured properly. So that's what they kind of help you do there. It's digital asset management. It's not, they're not trading, they're not teaching you how to make money. They're working with high-end clients that already have money or have a lot of crypto already. That's why I don't have a problem. I'll just play a couple more because this is exciting stuff, guys. Because if XRP could go to $1,000, this is, yachts in Monaco with Lamborghini money for some of us.
Pricing for XRP for the ETFs to get listed. I think it's actually the other way around. You're going to need the ETFs to get listed to cause a supply shock on the XRP to get to price appreciation. And that's when the increase will take place after the ETFs go live. Now, could there be other supply and demand dynamics that cause price appreciation before that? Sure, there could be treasury companies, there could be a liquidity crisis on exchanges because of Tether. There could be, compounding other factors that would cause price appreciation before the ETFs go live. But I do think the ETFs will just exacerbate the price appreciation of XRP. Does there need to be a pricing? And this is going to sound mean, and I don't mean it that way, just so you guys know. Unfortunately, most people that do have large amounts of XRP are going to end up like water users. It's an inevitability. I can come on here every single night if I want to and talk about how to, wealth management and wealth preservation and family office and all the things we do with our funds. But inevitably, there are going to be at least 50% of those people, 25,000 people that come into 20, 30, $50 million, $100 million that will be broke in 3 years. They will buy homes, they will buy cars, they will buy liabilities that burn through that cash. They will go on extravagant trips, they'll buy yachts. They won't do it inside of an LLC to mitigate taxes. They don't know how to structure their estate. They won't put together a family board and financial committee. They won't continue to double down on assets and mitigate risk and diversify their portfolio. They will sell it and have large tax implications instead of borrowing against it and using that liquidity to buy assets that cash flow and offset taxes. They're not going to do it the right way. And I'm hopeful that even if you guys don't work with us, I try to make it simple. We do a lot of cool stuff at Digital Essential. Even if you don't work with us, the main takeaway, if you take something away this evening, is just to start educating yourself on how to protect your wealth over the long term, insurance, trusts, structures, the right professionals, curating that group around yourself to make sure that that doesn't happen to you. That is the gift and the contribution that I would like to make to the XRP family. Not even the business and what we're doing, just that people start thinking about that now and realizing that that's a real thing and trying to mitigate that risk for them and their family so that they do have this wealth over the long term and they don't burn through it.
So I know it may seem like we're just watching videos together, guys, but in this group, we're all about helping you to secure your financial future. Anything that I've already investigated or looked at and think is a good idea, I will share with you. Obviously, I wouldn't be showing you this guy otherwise. you don't need to be rich already to work with them, but I would say that if you talk to them, they're gonna say you probably should, before you really worry about asset protection, all that kind of stuff, you probably need about $50,000 or more in crypto. And many people have that or more, but it's not just that. If XRP does what he thinks it's going to do in a very short period of time, then some of you could be sitting on millions, tens of millions in a very short period of time. And I know that might sound improbable for some of you, but if you got 20 or 30,000 XRP, less than $100,000 worth, and XRP goes to $1,000, just do the math, guys. Do the math. It's huge, right? So $30 million out of the blue, that's what he was talking about, kind of like a windfall.
You said if you own XRP, you're already rich. Now that we're well into 2025, how much XRP do we need to become rich? What is your thoughts on that?
I think that's different for everybody, right? Everybody has different goals depending on what their vision for their life and their family is. I look at financial freedom or wealth as you have your expenses for your dream life. I would encourage people to write that down, whatever that is for you. For me, the financial freedom is you're making twice that amount from passive income. So you're putting your assets to work in a way where you may have some involvement, you might have to look over things on a regular basis, but you're not actively having to work and spend your time going somewhere. And
up until this point, that's real estate. That's what I've been doing. And up until this point, that is a passive, semi-passive way to invest your money into something where you have property managers that are doing all the work, and you got tenants paying the rent, and you have some, you collect a check every month, and you're the asset manager, so you're overseeing your property managers. Every week we have an asset management call with my partners and my managers, my property managers, and we just go over the numbers. That's how much involved I am. Other than that, they do everything. They fix toilets, they deal with tenant issues, they deal with all that shit. So that's as passive as it's going to get up to this point. Things get much more passive when we're dealing with crypto, guys. Because there's if your XRP, let's just say my example of before, you had 30,000 XRP and XRP went to $1,000 and you got $30 million worth of XRP now. First of all, you can borrow against it tax-free. You can also loan it. You can also hold it in staking type of accounts where you just get an interest. Let's say 3%, 4%, 5% per year interest. Let's just do the math on that. You got $30 million times 5% per year. That's 1.5 million a year interest payments to you. Can you live off 1.5 million a year while your 30 million sits there and goes up in value over time? And so this is proper structuring. Like he said, most people are going to wake up like a lottery winners, and they're going to do the dumb things like people do when they win the lottery. They go cash it out in their own name. All their relatives and everyone comes out of the woodwork wanting a handout. They go buy the nice cars, the nice houses, the watches, and their $50 million lottery win after paying taxes is 25 million, and after buying everything they want, they got 10 million left. And that 10 million will be gone over the next couple of years because they're just spending. They're just spending. They're living rich. They've never built it. They don't know what it's like to have it. They don't understand how to protect it. And it goes quick. You guys heard the stories about people who win the lottery, they're broke within a few years. And you don't even understand why. It happens with sports stars as well. They come into big contracts. They never learned how to manage money. They never learned wealth preservation. They get $50 million contracts for playing basketball or football, and they go and buy the fancy stuff, and they're dripping in jewels and houses and cars, and then they break their knee and they can't play anymore. The contract ends, they got no more money, and they got to sell everything, and before you know it, they're broke. And it's sad, guys. So it's sad. So what you got to do is you got to make your money go. Once you earn the money, you got to learn how to protect it. So if you win the lottery, just so you know, I've said this before, if you ever actually win the lottery and you get, let's say, 50 million after taxes, you win $100 million and you got 50 million after taxes, right? What you do is you never, ever, ever pay cash for anything. This is the opposite of what most people would think. They would be like, I don't need to finance anything. I can just pay cash for everything I want. No. You put that into a safe, high yield investment account where you're making 3%, 4%, 5%, 6%, 7%, 8%, 10% per year. Okay. So let's just say you're able to structure things properly where you're making 8% per year on your $50 million. So that is 50 million times 8% per year. That's 4 million a year. You go and finance the $10 million mansion. Now you got a $40,000 a month mortgage payment. You go and finance the Rolls Royce, the Lamborghini. You got loans, you got car loans, you got mortgage payments. You get the boat. That's fine. Go ahead and get the $2 million yacht. Finance it to the hilt. Finance everything to the hilt, and you pay all of those expenses and all those bills from the $4 million a year in interest that you're getting from your $50 million that you never have to spend. You never have to spend it. It just keeps growing and going up in value. And you're living the life of your dreams because you can easily have everything you ever wanted on $4 million a year interest payments, right? And this is like, it's counterintuitive because most people would think, well, why would I want to pay interest? Why would I want to get mortgages when I could just pay cash for things? Sorry, that's just what they lead you to believe. The richest people in the world borrow the most and use leverage and debt the most to get richer.
Rich dad, poor dad.
I'm sorry? Say that again.
Rich dad, poor dad.
Yes. John, you just got here. So are we saying that Jake Claver is a good person, trusted resource to work with? I would say do your own research. I just said before you got here that I am not vouching for him, but he seems to be on the up and up, and he does talk. I haven't heard him say anything that's not true based on my own knowledge and experience. And he just happens to be in a company with a service that is definitely needed in this industry. This is this right here. He does have a big team, somewhat of a team here. And these guys, you can go and look at all of their different backgrounds. But it is digitalfamilyoffice.io. I don't have any referral links to give you because I have not worked with them yet. But I am in the process of consulting with them myself, just so you know. But what they do is they provide tax structure, asset management, digital asset custody, wealth management, trust, and things like that to protect yourself and your wealth and your crypto, which is it's a new market, guys. This is a problem that is coming to be that didn't exist before. Most banks and most normal financial institutions tell you to be careful with your crypto. Oh, don't ever put more than 1% in crypto. Everything else needs to be in your bank and cash and real estate, gold, silver, all these things that have been known about and proven for so long. Well, things are changing quickly, right? Things are changing.
Everybody else's phone to make that money. So that number's gonna be very different for everybody. I think you'll be able to earn somewhere between 8 and 12% fairly easily on your XRP. We already have strategies that we're putting into work and should be generating even beyond that with the partners that we have. But conservatively, I think 10% a year is pretty reasonable, especially where interest rates are. And so whatever you think XRP is gonna go to.
You said if you own XRP, you're already rich. Now that we're well into 2025, how much XRP do?
He's big on XRP because what's about to happen to XRP.
Position in XRP over Bitcoin, and Bitcoin could end up in tier 1 asset. We've already seen it rolled in a lot of large ways. I want premium collateral that I can borrow against and earn yield with, and that's why I'm positioned with XRP in particular. And it's got a bigger likelihood of return. The ROI on it will be much more significant than Bitcoin. It'd be like when Bitcoin was $5. The reason I'm positioned in XRP over Bitcoin, and Bitcoin could end up in tier 1 asset.
There is one I'm trying to find that I want you guys to see before we move on here.
Let me just run down all the benefits of an LLC in Wyoming for you. So one, there are 5 states that provide attorney-client privilege. Wyoming is one of those. So when you file it with us or with another attorney, it doesn't have to be with us. Their name and address for the registered agent is what should appear on the file. If your attorney doesn't know what he's doing, if you do LegalZoom, it's not going to do you any good. You need to work with an attorney to get this benefit. So attorney-client privilege, so that your personal information isn't out there in a public forum to be able for people to associate you with the LLC. So anonymity, privacy, big deal. On a continuing basis, when you're filing it, you also want to still work with an attorney or a team, because if you do the annual filing, your name's going to end up on the paperwork, and then it attaches you to the LLC, pierces the corporate veil. And in addition to that, again, you lose that privacy benefit. 2 is no state tax there in Wyoming. So depending on what state you're in, if you're in California, that doesn't matter. Cali's going to get theirs. New York's going to get theirs. There are certain states, Washington's probably another one, like they're going to get their money. But some states, they're not quite as picky. about that, and so you might be able to mitigate some state taxes with the Wyoming LLC. In addition to that, the regulations around digital assets there in Wyoming is much more favorable than any other jurisdiction. In addition to all of that, you also get charging order protection there in Wyoming. So let's say, God forbid, you were in somebody, things happen. You're texting on your phone, your mom calls you, something's happening, go into the back of somebody driving down the road. You're okay, but they're hurt. They sue you. If you have the corporate bail done correctly, if you got your meeting minutes, you've issued the equity, you've done your board resolutions, all the stuff that our paralegals help people do for the corporate bail service, it will stand up in a court of law, and they won't be able to come after the assets in the LLC. Let me just run down all the benefits of an LLC in Wyoming for you.
Precious, it is it's Jake Claver is his name. This is his direct Facebook page right here and his website. I'll just post it in the group one more time and then we can move on, guys. You guys can go watch your own videos. There was one I wanted to find. There's some of these that are probably good
Pay
enough.
less taxes cashing out at gains from a business crypto account, and discuss the benefits of business crypto accounting. If you file an LLC and you pay yourself a reasonable salary, that's one of the qualifications. So you gotta pay yourself somewhere between $50,000 and $70,000 a year to manage that, or you need to, pay your spouse out of the LLC that amount to manage it. That's what a lot of people do. If you file a single member LLC, you might say it's manager managed and put your spouse as the manager and pay them. And then you can take dividends out of the corporation and you don't have to pay the 13.5% of tax on that for Social Security, Medicare, Medicaid, the employment tax basically. And you won't have to pay those on any dividends. So that's a way that you can save some money. But the cap gains, like those are gonna flow through if you file as an S corp. The benefit is you're gonna be able to spend the money in a way where you can offset that income. So let's say you go buy a vehicle, Section 179 of the tax code is software and heavy vehicles or heavy equipment. Anything over 6,000 pounds is considered heavy equipment. So if you buy a jet, if you buy a yacht, if you buy a G-Wagon, you're gonna get to write off the full amount of that purchase in the first year, even if you finance it. So let's say you put 20% down on the G-Wagon for 200 grand, you put 40 grand down, but you can write off 200,000 to get your income. So you basically just save, if your tax bracket at 37%, you're gonna save, $50,000 in taxes, maybe more than that. Because you're gonna offset another 160 grand in addition to what you had spent. There's a
lot of smart stuff, guys, you can do when you understand it. A lot of people just think, oh, set up a trust, set up an LLC, but there's things you got to do before, during that time. If you're managing an LLC or managing a holding company, you have to do things the right way. You can't just, it's not just a pass through where you can just spend on whatever you want and buy yourself whatever you want. And just because it's through an entity, you gotta have a salary, you gotta have minutes, you gotta keep track of all the stuff.
Should I keep buying XRP as the price continues to remain over $3 in order to accumulate coins rather than wait for a pullback for a cheaper price, i.e. get as many XRP as possible while the price is still low? That's what I'm doing. I just dollar cost average when I have some extra cash. Do I pick tops and bottoms? Absolutely not. Have I bought XRP at outrageous prices? Yes. Have I bought it at super stupid low prices? Yes. So you just get while the getting's good, man. Could we pull back?
I wanted to find the one. He recommends Descent cold storage. Some of you are asking me always about cold storage wallets. I have a Descent wallet. I had one before I ever heard about this guy, but he recommends it.
Wallet, if you want a recommendation, we like Descent. I like it because it has a biometric. It has the largest breadth of assets that you can put on a cold wallet. It's got a 25th seed phrase word that you can add to it for additional security that you can keep separate of your other 24 keys. If God forbid something happens to you, there is a passcode where your spouse can get into it. Has a good user interface, UI that's simple to use. That's why I like Descent.
So I posted his Facebook and a lot of good information there.
3, 4 digits XRP. All of this is driven off of catalysts, real world events, things that need to transpire for a supply shock to happen. If we don't get those, it's not happening. Retail demand, even the ETFs, is not going to push XRP above, I mean, ETFs might push it to like 20, maybe. But if you have treasury, if you have the exchanges going to liquid needing it because Tether's imploded on itself, you got the back end of the stock market that needs to de-risk and settle in real time. You got Japan launching their CBDC and needing it as a liquidity buffer to be able to settle markets and mitigate volatility so that the FX market doesn't break in half. A lot of things that they can do in order to drive that supply and demand dynamic. Exchanges only list however much they need to. They can drastically reduce the amount of available XRP on the market and people would bid up the price. And retail would liquidate a little bit onto the market, but we don't control the market for XRP at all. I don't make any bones about that. It is definitely institutionally driven, the value of XRP, suppressed or increased, whichever one it is. They have control over it. 3, 4D.
Nah, I can't find it. Let's go back and look what's going on with Bitcoin here. It seems to still be coming down a little bit, back to 108.2. So guys, I mean, it is as far as buying, as far as going long is different than buying. Buying at a dip like this is good. If you're buying Bitcoin or XRP or any of these tokens that you're trying to accumulate more of, right now is a good time to buy. What if it goes lower? Buy more. What if it goes lower than that? Buy more. But because if you just wait for it to go lower, it may not ever go lower. It could bounce here and go back up. So when we have a big drop, which we have had here, this is Bitcoin, obviously, we dropped from 113.4 yesterday to 108 now. It's a big drop in a day. Could it go lower? Yes. Should you buy? Should you wait? I would say buy. And then if it does drop further, buy more. And if it drops further, buy more. That's dollar cost averaging. And for some of you that don't really understand why you would do that, why not just wait for it to all get down to here? Because you don't know it's coming down to here. Hindsight is genius. Yes, if it gets down to here, you might wish that you just waited, but it may not. It may bounce here and go back up. So hypothetically speaking, if you bought one whole Bitcoin right now at $225 right now, and then it dropped down to 106 and you bought one whole Bitcoin at 106,000, and then it dropped down to 103 and you bought one whole Bitcoin at 103,000. That means you have 3 Bitcoins that you spent $317,000 on. But if you divide that by the 3 purchases, your average price is $105,000 per Bitcoin. See how that works? So dollar cost averaging is good. All right, Cheryl, have a great rest of your day. Thank you, Amy. Have a great rest of your day. I hope you guys enjoyed the call. I know, it's not necessarily all just trading. Sometimes Bitcoin's not doing much. We already had a big drop today, but hopefully you got some insight because I know we all plan on getting rich and richer, and you do need to protect your assets. You need to safeguard your gains and returns. You may not need it right now, but it's good to have that information in your pocket and kind of know what you should be doing and looking at and trying to set yourself up for in the future.
So Nico, I'm in a short on BTC already.
You are?
Yes.
Okay.
1 second here, stupid thing.
Me too.
You think I should add some right now?
No. I mean, I don't know how much what your personal situation is or how many contracts or anything. I don't know if you want to mention, if you want to say that, but no, because I mean, look, you see this downward trending support here. It hit it, bounced a little bit. It could just hit it again and bounce and come up to here and then hit that. So you gotta be mindful, even though it probably will continue down for a bit, maybe even throughout the weekend. And the fact that The fact that we got below the 112 up here, retested and reached up and couldn't even get back up. We got to 111.5 here and then pulled back down really quickly. And we're down in this zone right now in the 108 or 107 to 10 to 110 zone. This is like this grayed out area that I have here is kind of like a big consolidation resistance level going all the way back to back here when we were in the coming up to 112. We had a lot of resistance here that we couldn't get through. And then we finally got through it here and retested as support. And we just came back down into it right now. If we break below that, then we're going to go down to the 102, 103 zone down here.
No, I don't have that much in there. I just have 300 in there, but
okay. Well, I mean, if you
$300 if in there,
generally
but nothing.
Yeah, generally speaking, whenever we're in profit and we want to add contracts or increase leverage or anything, that's usually greed speaking. But then again, how are you going to make more money if you don't take those risks? But again, if you take those risks, you could lose more money. So that's a perplexing situation to be in. But a lot of people just give in to the greed. And so what I do is usually I'll make, like if I think we're going long here, I'll usually enter the position with a certain amount of contracts. And then once I see that it goes above and holds as support and starts to climb, I might go long again with more contracts. And so that would have been a great thing to do here. As soon as we came below the 112 and retested as resistance and then dropped further and then made another test up, and that was a lower high. That would have been a good place to add more contracts. I'm short down here because I was short down here from here before it even went up to here. Now I should have added more contracts up here, but this happened kind of overnight or early in the morning this morning when it started dropping. And really all I wanted it to do was come back to break me even anyway, or to get back into profit, which I am now in profit on that. But I only have $1,700 or $1,100 margin. I'm at 25x leverage, so I'm trading with 27,000 contracts. And now, if I wanted to now add more contracts, it would be safer because I'm already in profit. You're already in profit. You want to add more contracts, you can just come up here, slide it to a little bit more. I wouldn't change your leverage or increase your leverage personally.
Okay. Yeah, I entered at 112, just under 112 I entered.
Yeah. If I increase my contracts right now and put another 25,000, 20 or double it, let's just say another 27,000 here, my entry will be roughly around the same. Maybe it'll go down a little bit, but I will probably, if this comes up to this top again, I could go negative, and I'll go negative with more money. So you got to be careful when you do that. Just remember, I was already negative for a while and it just got down in a profit. If I get greedy and start to double down now, it could bounce here and climb out and I'll be real negative again. So, and I'll be negative with twice as much money rather than what I was negative. So that's usually what greed does. It comes back and bites you in the ass sometimes.
No.
But
I've been there.
Yes, but it is true. It is trending down right now, and we are below this zone. And it could, guys, it could really go down to this level at this point, which is now down in between. I would say 100,000 to 104,000 range somewhere. And shit, I mean, if in reality, that's just the top of this resistance line. Where when we broke out, we hit support here and climbed. It could just come down and retest that, but it could also go through and come all the way down to this resistance area here. Which is the 98K. And what is that? I'll show you what that is in a sec. 98K, 98K was a previous resistance, support, resistance, I mean, a couple times we went through it, bounced, went through it, resistance, went through it, bounced, went through it, resistance, support, resistance, goes back a while, and then resistance here before we broke through and went to these highs. Then we came back and retested it once here before climbing out. And we could technically come back down to it here. And if we do come to it here, it could come down and hit this and just wick down to it and bounce out And what would that be? That would be the center line. In fact, let me get a parallel line here and draw that right on top of that one. Bring that down to there. And show you what I mean by that. See this blue dotted line right in the middle? Just so happens to have been support here right before the breakout. Remember what I always say, generally speaking, when we're ever in a big bull flag, we hit the top, we hit the bottom, we hit the top, we hit the bottom, we hit the top, and we hit the center line before we break out. That center line comes right to the 98K. That would be the next circle down. So I have one circle here, which is the 100, between the 100 and 104 range. That would be the resistance, which would be the previous resistance of this bull flag, that white line right there. Let me get rid of that. And then the center line would be right here on this yellow line right there where it converges. That would be very interesting how all this stuff just kind of lines up. That would be the next support. Breaks all of that. Then the next one down below that would be probably this one. Right where this upward trending support is. And can you not just see that playing out? I mean, I can. Not saying that's going to happen, guys, but that's what will happen if we break below this support and hold as resistance. So we would need to come under that, bounce underneath that, drop, hit that as support, bounce, break through it, hit that as support, bounce, hit that as resistance, bounce. I'm only just envisioning that from experience. I've seen this happen obviously thousands of times over the years, and so that's kind of how it works. And plus, we got this big M pattern that we've been talking about here, way up here, and that is a real thing, and that was right to that 112. And if we just take a trend line and hold it to the top of that, right at the 123.5 to 124, and come down to the 112 here. And we bring that down to the breakout point. That's kind of bringing us right down to either here or the center line.
Nico, will you draw that again? That's interesting.
Which one?
That where you just did from the bottom of the M and then measured it back over there. That was.
Yeah, so generally whenever you see an M pattern, you got to look at the start of the M, which is at the 112 right here. Where it broke out and it retested. Here's the middle of the M. Here's the other top of the M, which is double top. We had 123.5 and then 124.5. And then we come back down and we hit the bottom again, 112 right here. We hit it, bounced, broke through and hit it as resistance and started to drop. So this is the floor of the M. So you'll get a trend line and you will draw generally when an M is bearish and M's tend to break to the downside. So you usually want to get to the top of the M to the bottom of the M, which is the floor, from the ceiling to the floor. And the ceiling is somewhere between 123.2 and 124.5. So I'll just put it right there in the middle. And then once you draw that line there, you grab it and then you put it to where the breakout is. So if the breakout is right here at the bottom of the M, right at 112, just right down to this center line in the middle of this.
That is crazy.
Yep.
Yeah, I see it. Okay, thank you so much.
Cool.
That's amazing. Thank you.
Yeah. This is just manual technical analysis based on just using your eyeballs. Obviously, you can do this with tools, Fibonacci retracements, all that kind of stuff. But once you understand what you're looking at, you can just see it right on the chart. You look at these
Two
previous.
white lines just below the red one, Nico. What level are they? Can you give us those numbers?
This right here.
Yeah.
Yeah, this is the 1075 to the 1105 range. That's just a range because
1075
of
to
this
110.
previous resistance level right here. So we hit it and we went all the way to 112, but we did not hold above this level. We came back below the 1105 and we hit it as resistance, 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 resistance. And then when we finally broke through it here, we came back and tested it as support. So that is a major support and resistance line right there. And that is the 110.5. Now, if you break through that, the bottom of it is 107.5, where we hit resistance, resistance, support, 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 resistance, support, resistance, 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 resistance. And then so that's a zone, that's a price range. So instead of just having one straight line going across, I have it between 107.5 and 110.5.
Okay, so when we break the 1075, like you were saying earlier, that's a good time to enter. And at that stage, you'd just put a TP at 104 temporarily or lower.
If we break 107.5, you got to be careful with entering because as you can see, there's been some times where we came below it, came back up, came below it a little bit, came back up. It's got to hold underneath. Whenever we break a support level, it's got to go under it. It's got to go under it and then retest as resistance and then start to fall further than where it first went through. Because if it just goes through like this and then sucks back up above it, then it didn't retest. If it just goes through and sucks back up above it, then it didn't retest. Now this one ultimately did fall, but what really should happen and what they teach you in trading school is that it needs to break below the line, retest, bounce, and not be able to get back above that line. And then it should come down lower than where it broke through the first time. That would be a high, a lower high, a low, and a lower low. Now you have what's called a trend reversal or a new channel happening, right? Because if it doesn't do that, then here's what most people do wrong is they'll enter here. As soon as it bounces, they'll enter here, short. Well, Nico said, if it bounces, go short. Yeah, but I also said if it bounces and goes lower than where it first went down. Because if you don't do that, if you don't wait for that, it could just bounce and then just come down to here and then go back up higher. And then now what you have is a high, you have a low, a higher low, a higher low, a high, a higher high, and a higher high. It's trend reversal again. So now, just because it does go lower here, doesn't necessarily mean it's going to just keep going down. But when it does keep going down, it usually is only after it's gone a little lower here, So it's like one of those situations where it doesn't always do what we want it to do when that happens, but it does. But in order for it to do what we want to do, that has to happen. So, it's a process of elimination there. So to answer your question, should you go short there? I am short right now, and I think I'm going to add to it right now at 108.5. It's at 108.5 and it's bouncing. Let me just go back to a lower time frame. As you can see, it's kind of bouncing on the downward trending support line right here, this line. It hit it. And what does this look like, guys? Anything? This is a bear flag right now. Bear flags tend to break to the downside. So what this might do first is it might consolidate in the flag. It could go all the way over to here. For all I know, it could go all the way over to here and then drop through. So you can either wait for it to do all that, but the problem is when you wait too long, sometimes it just does it, right? So you are taking a little bit of a calculated risk when you are going short inside of a bear flag. Normally what we would do is if you're going to trade properly and you're going to be risk averse and you're really going to protect yourself, you want to wait for it to break below that line and retest as resistance and start to fall, and then you go short. But I'm already short up here. So to me, I'm already in. And what I'm going to do now instead is I'm going to put a stop loss up here above this possible channel here, which would probably be up here. I'm going to put my stop loss up here. I don't even have a stop loss right now. I'm going to put it up here because I think if we break back above this previous support, which it could do, guys, it could just come up and retest right there and hit that. And this would look like this. This would be a different looking bear flag. That could happen. But so I'm going to put my stop loss above this just to be on the safe side, because if it does start to go up again, I don't want to be stuck in a negative trade again for that long. So I'm going to put my stop loss right here at, let's just say 109,600. 109,600. I already have my TP at 97.8. You guys probably didn't see it because it's off the screen. But let's just go down and look. I mean, it's pretty far down. There it is, down here. Why do I have it there? That is right, basically where this center line meets this center line right here meets right there. Boom. Because I think that might be where we're going if all of this plays out. You could take profit here, you could take profit here, you could take profit here. I just have it there right now as a placeholder. What will happen is as soon as this starts to go into profit and drops down below these lines, I will move my stop loss to break even. If this goes down a little further, it gets down to this level, I will move my stop loss further into profit. If this gets below this line and holds as resistance down here, I will move my stop loss to above this line. If this gets down below this level down here, somewhere in this level down here, I'll be probably closing the trade out in profit. Or maybe I won't. Maybe I'll just keep moving my stop loss down in case it just keeps going.
What time frame are you on there, Nico?
This is I'm on the 10-minute right now just to zoom in and show you. But like if I go up to the daily, you'll see the whole thing.
So how much?
Say again? Whoever said that has an echo. James, you might have you might be logged in twice on your phone and on your computer or something. Log off one of them or mute one of them. I don't know if that's the case or not, but that's usually what causes that.
Yeah, I had my phone. So can you when it's bouncing like that, it's going to be like every like half hour or hour as it's going up and down. Can you like scalp those? Like go long if it's rising, go short when it's doing that. Because you're playing.
You can, but the problem is like that's like musical chairs. It bounces here, you scalp, you take your profit, and then you go long. But what if it doesn't go up to here and it just drops right through down to here? So you're one of these times the music's going to stop and you're not going to have a chair. So you're going to get into now the better thing is to do is if we think it's going to continue to go down in the short term and you're short and you're in profit, why not just stay in that trade and just move your stop loss into profit and just wait? So sometimes that's the safest, best plan to do. A lot of people just get greedy and want to scalp. Or you could do this. Stay in the trade, stay in the short in one account, and then go up. And if you don't already have a sub account, come up here to a little image, create a sub account, transfer some USDT or Bitcoin in there and trade and scalp in the sub account. That way you're not risking all of it on the scalping. That makes sense? Bailey asked, over what timeline did something like this situation happen before? Are you talking about, I'm not sure when you asked that question. That was about 20 minutes ago, so I'm not sure.
I was talking about the M chart, basically this like whole story, but you answered it when you said you were looking at the 10-minute intervals.
Oh, yeah. Usually when an M pattern breaks the support, it usually happens within the next 24 to 48 hours.
Hey, Nico, what's going on, man?
Hey, Russ, what's up, buddy?
Hey, I got a quick question. I don't know. I hadn't been around for a little bit, but I've been thinking about this, been meaning to ask you about it. have we talked about this some months ago? Have we hit that bull market top? You got a way to look at it on the 6 month frame. I can't remember exactly how you did it. You would pull up and look at that 6 month, and we would look at those candles and see and predict where we might be at that bull market top. Are we there right now? Or we passed it rather?
That's a good question. And yeah, you must have missed a few calls because on the 6 month time frame, this is the first time. Well, not the first time, but it did happen. So here is the 6 month candle. And what I was telling people, guys, over the last many months is that on the 6 month time frame, you look at every bull market top, and then you find the bear. Here, this is the bull market top back in 2011, and then you find the bear market bottom, and then you find the first engulfing candle, and it's usually 4 candles after that. 1, 2, 3, 4. That's the bull market top. Bear market bottom, first engulfing candle, 1, 2, 3, 4. That's the bull market top. Bear market bottom, first engulfing candle, 1, 2, 3, 4. That's the bull market top. Bear market bottom, first engulfing candle, 1, 2, 3, 4. That's the bull market top. So generally speaking, now the only time that was not the case was last bull market in 2021. The 5th candle went up a little higher than the 4th candle. This candle was 65K, and this one went up to 68K, but then that was the beginning of the bear market. And I said that never happened before in any of the other bull markets going all the way back to the beginning. That 4th candle was always the highest. And so 2021 was an anomaly, and that could have been because of all the problems that year, FTX scandal, COVID, all kinds of weird things were happening. But it did spike up a little higher, so that did happen. Now, here is the 4th candle on the 6 month time frame. It hit the high there was 112,000. And as you guys know, the next candle opened. So yes, we did close that candle out, Russell. That was what was it? August 1st, we closed that candle out. And then this candle started and it went up all the way to 124.5. So that whole 4th candle on the 6 month time frame thing, it kind of got busted this time. It actually maybe last time, because last time it did go up a little higher. Then I was thinking, okay, well, maybe that little bit higher that it did was the same thing that happened here, where it went up a little higher and then it went into a bear market. This one, we went up a little higher. Maybe we're going into a bear market. I don't know. I'm not going to say we are because, all the other indicators are not yet there. But there's another way to look at this, Russell, and that is on the 12-month time frame. So if you go to the 12-month time frame, that combines the 6 month candle and the 7th month candle, or the first 6 months, or the 6 months, and then the second 6 months of a year. So now instead of a 6 month candle, it's a 1 year candle. Okay. And if you do it this way, every bull market top so far, boom, right here. This is 2013. Now you just count 4 candles. 1, 2, 3, 4. That's the top. 1, 2, 3, 4. That's the top. 1, 2, 3, 4. This candle that we're in right now is the 4th candle, and we have 4 months and 3 days left of that one, which will bring us to December 31st, January 1st of 2026. So whatever the top of this candle is, historically has always been the top of the market. The problem with that is that over the next 4 months, we could go down instead of up. And then when that 4 months is over and the next candle starts, this candle prints, whatever the top was of this candle was the top. And if we don't get higher than 124.5, that would be the top. That makes sense?
Awesome. Thank you.
Yes. So I would do it more on the 12 month now. We got 4 months left. We got till the end of the year, and a lot can happen in 4 months. Let's just go back and look at what did happen back here. Remember, right here when we were at 108, it was December of 2024. We bounced and came up to 109, January 20th. All the way down to 75K, guys, in April. 3.5 months down to 75K. And then we bounced out and went to a new all-time high at 112 by May 20th. So in 4 months, we went from January 20th at 70, I mean, at 112, I'm sorry, yeah, I'm sorry, right here, 109, January 20th, to 74.5, all the way back up to 112, all within 4 months. So that can happen in a 4-month period. So we could go from 104 all the way down to 89, 90,000, bounce and go all the way back up to 130, 140, all within the next 4 months. Of course, even 150, 160, we could have a serious bounce. So that is possible. On the other hand, if we do slowly just come down and that 4 months is over down here, like we get to the end of the year and we're still down here somewhere, then I will call that 124 the top. You know, if it doesn't have time to get back up there before that 4 months is over, then that's probably the top. And we will probably then break this upward trending support. And that would be going into bear market territory, probably somewhere back into the 70K range over the next year. That could be possible. Now, some people's like, how is that possible with all these positive catalysts and everything going on for Bitcoin and crypto and everything? Every bull market, guys, everybody think this time is different. Every bull market, they say, yeah, but this time is different. And every single bull market, it has never been different. You know, the cycles just keep doing what cycles keep doing. This was every one of these between this line and this line is 4 years, 4 years, 4 years. And we keep having a bear market bottom and a bull market top, bear market bottom and a bull market top, bear market bottom and a bull market top, bear market bottom. And right now, are we at the top? It doesn't look like it went all the way up into the red, but neither did this one. This went beyond the red and then bottoms in the purple. This one went up to the red, bottoms in the purple. This one went up to the yellow and the orange, bottoms in the purple. This one went up to the green. So as you can see here, we're having what do they call it when your gains are less. So in other words, we might have had 1,000x here from the bottom to the top, 100x here from the bottom to the top, 10x or 20x here from the bottom of the top, and this time 8x from the bottom of the top. Depreciating, declining, diminishing returns. But this is still much higher. It doesn't look much higher, but just look at this line going across. It's still way higher than the previous bull market top and way higher than all the other ones, right? So we're still getting higher highs on these bull markets, but who knows? We could have already hit it at 140, at 124.5. We just don't know yet. So it'll take till the rest of the year before we'll know whether this is the top or not. But I'm not saying that it is, and I don't hope that it is or think that it is really. But let's just go back here and look at one more thing before we wrap this call up. Just so you know, guys, we do have the onboarding. For those of you who are new, we got onboarding coming up too. But let's go down here, guys. Let's go down here and look at the weekly time frame and see what's happening. On the weekly, on the RSI, we do have we did hit at 123 before we double topped at 124. We do have a lower high on the RSI, which is bearish divergence. We did drop below this yellow line, which is the moving average. Generally speaking, whenever we drop below the yellow line, it's a big dump. Just look at the price every time we drop below that yellow line. Always. So, and we are dropping below it, right? That top here was 124.5, and now we're at 108. Once we get to 104, that's a $20,000 drop. Now, can that happen? Yes, of course. It's happening over and over and over again. Look at this. Is this the floor? So could we bounce and come back up? Yes. We could bounce, come back up to 150 and still be in a lower. We could still be in bearish divergence. Let me get rid of this and let's look at the regular RSI real quick. Or the, let me look at the stochastic RSI. That was the regular RSI. Let's look at the stochastic RSI. On the weekly, we had the blue line cross the orange line to the downside. You remember what I've been saying for the last couple of weeks, guys? Usually when that happens, it's a big dump. And like if you would have shorted up here at 120, you know, when we were up there, when I told you and the blue line was crossing the orange line and getting below this, you'd still be in this huge short right now. Imagine if you would have just stuck to that. You know, when you a lot of times we don't see it because there's so many ups and downs happening on the lower time frames, but these indicators are pretty accurate on the higher time frames, especially the stochastic RSI. Let's get rid of that. Let's look at the Gaussian channel. Are we close to that? Gaussian channel on, let's go to the 5-day, and we are. That's not necessarily a good thing. Gaussian channel is rising while the price is coming down. If we come to this line and the Gaussian channel is right there and we just touch it again, we could get sucked into it. As you can see, we got sucked into it here. We bounced on the center line, broke out, made a new high. Bounced on the center line, broke out, made a new high. Could we just bounce on the center line? Yes. The center line could be right up here, and this could be up here, and we come to the center line, which would be like 98K, bounce, and we could make a new high. The unfortunate part about that is that most of the time when we get sucked into the Gaussian channel, after the second time we got out, it usually hits the center line and it can't get back out, and that's the beginning of a bear market. Bounces, comes down and bounces on it, hits the center line, bounces, can't get back out, bear market. Bounces on the Gaussian channel, bounces again, comes down to the center line, bounces, can't get back out, bear market. By the way, this is 2013. This one was 2017. This one was 2021. Gaussian channel ain't no joke. It is like quicksand. Once we broke out of it in the bull market, we got above it and we bounced on it a few times, stayed above it. As long as we stay above it and out of it, that's fine. But how many times can you touch the Gaussian channel without getting sucked in? 1, 2, 3 so far this bull market. So, hey, man, we could just come down here, bounce on it, and get back into this apex right here and break out to new all-time highs. I'm hoping that's what happens. And we get up here to 140, 150, 160, which is the 1.6 on the Fibonacci, which we have hit every time in every bull market, which would bring us to about 168 to 170. So far, every bull market, we hit the 1.6 on the Fib. And that,
where did you say that 1.6 on the Fib? What does that take us to?
So this is the Fibonacci going back 2013. This yellow line up here is the 2.36 on the Fib. If you start from the bear market bottom, and 1.6 and then 1. So as you can see, in 2017, we were at phase 1, phase 2, phase 3, phase 4, phase 5. And the one before that, we went all the way to phase 5 as well. So we get through all these phases. 1.6 on the Fib is the top of phase 4. We break through that, go to phase 5. And then we went into the bull market. 2021, phase 1, we broke through to phase 2. We broke through to phase 3. We broke through and hit phase 4, which is the 1.6 on the Fib. In 2021, we did not get through the 1.6. That's the only time in Bitcoin's history that we didn't get past the 1.6. Every other time we went to the 2.3. Could be because of COVID, could be because of FTX, a lot of reasons. We double topped at the 1.6 and then went into a bear market. This bull market here, phase 1, phase 2, phase 3, we broke through phase 3 into phase 4. 1.6 is up here at $176,000 for Bitcoin. We're halfway to it. We got close. We went up to 124, but now we're starting to come back down. If we come back down to this white line, and by the way, this white line, guys, is 70,000. It doesn't look like it. It looks far away, and it is right now. We're at 108. We're up here somewhere at 108. This screenshot was taken when we were, at like 112. So, but every bull market so far, we made it to the 1.6. But this time we didn't make it to the 2.3. So is it possible this time we don't make it to the 1.6? It's possible, but I just have to show you what history has been repeating and showing us this whole time. And if we do make it, and we already are in the phase 4, we're already broke through phase 3. So we're already halfway through. So logically, we should be able to make it to the 1.6 by the end of the year. And there's a lot of catalysts and a lot of good things that can happen, certainly with Bitcoin and XRP and all kinds of things that could cause that to happen. We could even go to the 2.3. If we go to the 2.3, that's 541,000 for Bitcoin in this bull market cycle. But we could have a big pullback all the way to 90 first before breaking out. That's also possible. And that would look like this. Tools on this one here. Let me just take a screenshot real quick before we wrap this call up. that would look like this.
Nico, quick question. What does market cipher say on a larger scale? Does it take into factor these indicators like the Gaussian channel and the rainbow chart and stuff like that? Or do you look at market cipher on a separate indicator?
Yeah, this red line that I just drew, guys, is that line I was showing you, that that upward trending support line that we could come down to. That would be at around the 90, 89, 90K range. So if we go through that and hit 70 and bounce on that, that could happen. But 70, that's why I have this so bright right here. That line is, we have to stay above 7 to stay in the game for this bull market. If we get below that, then it's bear market territory. Let's go back and look at market cipher you were asking about. So market cipher does not take in it. I don't know if it takes into account the Gaussian channel, but let's look at market cipher B. I mean, we do have on the 5-day, let me go to the weekly here. We do have money flowing out. We did have a big red candle, a red dot up here at the top when we were right up here at I don't know where we were, 122 or so. And we've been flowing out. Now you see money flowing out right here on the weekly. Let's go to the daily. On the daily, we did drop down. We had a green dot, then a red drop, then we dropped further. We had a green dot and a red dot again right now, guys. Right now on market cipher on the daily. Bearish. On the hourly, we just had a green dot. But does that mean we can't drop further? No. On the hourly, it might be, that's a green dot. Let's go back and look at why. Could be temporary little pull. Let me go back to the lower time frame. See what's going on here. And that's just this. That's just this hitting the bottom of this and pumping up a little bit. Nothing really to see there. That's for scalpers. If you're going to use market cipher on the 10-minute time frame, you're scalping. Okay, I'm on the hourly here, but let's go down lower. Let's go to the 10-minute. Green dot on the 10-minute. So if you're scalping, these are scalping moves here. If you're going to be in longer plays, then you want to go up here to the, 4-hour or above. On the 4-hour, we are dropping, and as you can see, the money is flowing out, and it's not even close to curving yet. What is a curve? A curve looks like this when this wave crests. It looks like a wave, like this. It's a wave that's cresting. Once that light blue stops and it just comes to a point where the blue or the dark blue is, like this, it's a crest, and that's where you'll get a dot. As soon as it crests over, you get a dot. Or right here, it's still just all going down.
So is that crest? That reminds me of like the RSI. Does that coincide with the RSI?
Yes. So market cipher, guys, go look it up. Go read about it. I don't have the time to go through it all now because, guys, onboarding starting right now. But market cipher is every indicator that exists all rolled into one. You just have to understand what each aspect of it means. And if you go to their website, by the way, the link is in our Discord group here under official links. Go to official links and you go up to right here. It's market cipher. And when you get there, it's going to look like this. And it'll explain everything. If you go to learn tutorial videos, it'll explain everything about this and how all of this stuff works and how to read this stuff. Now, there is a cost to market cipher. It doesn't have anything to do with our company. It's just the only indicator bundle that I've ever really used or paid for. It's not cheap. I mean, it's not that expensive. If you're going to do this professionally, guys, and you're going to take this seriously, it's probably good to have market cipher in your tool belt. 1,500 lifetime. It's a license. When you do buy it, you just add the license to your trading view, and then you're not going to put it on Phemex. You could put it on your trading view, and on trading view, then it's just going to show up here as an indicator. It's going to show here under script name, and these are locked because they're licensed because I paid for them.
Is there a free version, Nico? I remember that a while ago somebody mentioned the free version.
There are people out there that created what they call copycats or lookalikes, and they may work. There are some people that say that they're very similar. So yes, the answer is yes, there is somebody out there. You could probably just Google market cipher free version and see who's got something. I personally just use the original because I know that they keep their, they keep their software updated. And
But I
the
mean,
guy,
like
the
Bill,
guy
Bill was
behind it
mentioning-
is, for those of you who don't know, the guy behind Market Cipher is Crypto Face. He trades millions of dollars every day. He's a smart dude. He's a young kid, but he created Market Cipher, and he makes millions scalping and day trade. He does what we do. He just doesn't teach it.
But I was saying on TradingView itself, I thought I remember Bill saying there was a version on there.
Oh, I don't know. Get on the onboarding and ask Bill about that. I don't know. Bill might have a link to it somewhere in the tools.
Gotcha.
But, so there might be, yes. I did hear him say that there is somebody that made a version of it.
It's one called Market Cipher A free version 1.1 is by Falcon Coin.
Oh.
That's one version. That's one version I think Bill mentioned before.
Okay.
Another one actually also.
Thank you, sir. I appreciate that.
Yeah. Yep, you're welcome. I'm going to give you a quick update here, guys. It looks like we are breaking down again still, and we are at 108.3 and probably going to break this bull flag here soon and probably drop lower. I'm just going to stay in my short. I was going to add to it. So let me just add. I'm going to add to it right now since it's, I don't know if that's a good idea or not, but I'm going to do it anyway. And I'm going to put my stop loss up here where I told you. Oh, I already did it. Stop loss is there. And my TP is way down here at 90, 97. 97.8. I'll put that in the signal channel. It is a little risky. Obviously, you want your stop loss here in case we do break back to the upside. This zone could be the bottom. We could bounce out of this zone, but right now it's seeming pretty weak and we are in a downward trending channel. So the 112 was really an important structure to hold at, and we just didn't. Sorry, I'm talking to you guys without my screen, sharing my screen all this time. So we're still in this downward trend. I have a stop loss up here at 108. My stop loss is at 109.6 and my TP is 97.852. But we could bounce out of this 107 to 110 zone. We could bounce out of this, and if we do, that's great. Then we don't have to worry about all this dropping. But I don't know. The fact that we held under 112 is a little nerving for me. So I'm thinking that we could go lower first before we go back higher. All right, guys. If you're new, get on the onboarding call. If you're not new, stay tuned to the Discord. I will be posting any changes that I see here. I am currently in the short. I will post it in there, and I'll let you know if I change that or go long. If we break back above, I'd say 110.5, then we might be back in the game again.
Appreciate you guys.
Thanks, Nico. Have a
Thank
great
you
day.
so much, Nico.
You're welcome, guys. All right.
Thanks a lot. Thanks.
Have a great weekend.